To Libby Cantrill. She joins us from PIMCO as we ask what this all would mean for the administration. She's managing director and head of public policy there. Libby, what are your expectations and, what's on your mind as this plays out here over the past 24 hours?
Yeah, well, good afternoon, Kelly. Well, look, the administration has a lot of tools in their sanctions toolkit. We do expect this to be whatever's to be announced this afternoon or tomorrow to be sort of the first tranche in terms of potential sanctions. Sectoral sanctions are a possibility aimed at the financial sector in particular, potentially even the energy sector, security-based sanctions similar to what we saw under the Trump administration with the Chinese military and industrial companies. Also, export controls, again, similar to what we saw under the Trump administration as it relates to China, and then potentially a further sanctioning of Russia's sovereign debt as it relates to the secondary market. The administration has already moved forward last spring on the primary market. We could also see additional sanctions on the secondary market. But to be clear, this will be likely a first step. We do expect them to hold some of the more potential punitive measures, dollar clearing, even SWIFT access, secondary sanctions in reserve should we see more escalation in the Ukraine.
What's the impact likely to be on the U.S. economy and on the midterms, which the political calculus here is as heightened as ever, with that event just a few months away?
Yeah, politically, this could do two things, one positive, one not so positive. There can be kind of a rallying around the flag effect. We've seen that in other sort of military confrontations where the commander in chief looks tough and is able to sort of consolidate, political support. On the more negative side, though, this could make the administration's inflation woes even worse as it relates to, of course, oil prices and what have you. So sort of a mixed picture politically, probably too early to do a real read through for the midterm elections, and probably the same thing for the economy. It really will depend whether this is sort of more short term or whether it's a more longer term protracted engagement.
How serious are the steps under consideration that you think the U.S. could take here?
Yeah, the thing is, short of military invasion here, we are talking about things that are relatively incremental, especially given after 2014 and the annexation of Crimea, Russia has really moved to become much more sort of desensitized to sort of these types of sanctions. So they, still will be relatively marginal. But clearly, again, they can ratchet up in terms of sort of how punitive they are. Access to the SWIFT messaging payment system is really important. If they were to take that step, that would be quite draconian for Russia, but also for sort of the international community, and then also dollar clearing. Those are probably the two things that would be, sort of viewed as most punitive in our book, and then secondary sanctions as well. So again, we don't expect the administration to be moving forward with those, at least as of now, but, could be holding them in reserve should escalation continue.
What other steps do they have? If they, like you said, if those are the ones they're holding in reserve to kind of wait and see what happens, are there other options, maybe, I don't know, along the energy front, other tools that we've seen deployed in the past? What else is in the toolbox?
Yeah, the energy sort of sector sanctions are certainly a possibility. I think there will be a real eye, though, on the implication for, of course, European energy prices. But as you said in the beginning, the fact that Germany has now come out and halted the Nord Stream 2 pipeline, I think really was an indication that sort of Germany is all in here, that Europe is all in on this. And that may, give some more flexibility to the U.S. in terms of moving forward with those sanctions. Now, of course, military conflict, and everyone has said that is a no-go, given that Ukraine is, of course, not a NATO member. But there are other things that the U.S. could do in terms of arming Ukrainians, giving more sort of technical military support for them, then also potentially giving some more guarantees to Ukraine than it would to other sort of non-NATO folks. So, Again, these are all potentials. And it's all kind of speculation at this point because it really is dependent on what Putin decides to do here.
One quick final question. What does it mean for the defense sector, which has been under tremendous internal pressure over the past 10 or 15 years about the amount of spending? It was a big part of the sequestration and the Tea Party, all of the sort of anti-fiscal spending movements that we've seen. Now we have this heightened concern about geopolitical affairs. We have investors looking to the defense stocks trying to figure out if that's a place to be. What would you tell them?
Yeah, look, I think this is likely positive just for defense spending in general. And I think something you're absolutely right that defense and sort of non-defense discretionary spending were both in the target of this sort of sequestration, these kind of budget cutbacks from years ago. But there has been a pivot in Washington over the last few years. I think there's a sort of a recognition on both sides of the aisle that those cutbacks were pretty draconian, that they've had longer term implications in terms of the Pentagon's ability to plan and what have you. So I think that if anything, this is more of a tailwind for increased defense spending. But I don't think that that's necessarily a departure from what's happening right now. We're seeing about Biden likely asking for about $730 billion for the Pentagon just for next year. So again, a pretty sizable amount, but this can only help for sure.